Hello. It's a Tuesday. It's the 6th of February. Joe's doing the market roundup with you as always. Let's jump into it. I'm going to break down the meaningful news of the day, which we have had very little technical analysis, more of a boring analysis. And we got some bull bears and some sideways trades to trade with the community as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we get into the market analysis, you're going to see that we actually hesitated after a pretty good surge up on Friday. Markets have been super bullish, consolidated, had a little bit of a pullback and pushed higher. It looks like we are consolidating again. So we'll stay with that. Daily news, the market's pausing here a bit. It's only Tuesday, I know, but coming off a pretty good move on Friday, associated with some pretty good volume on the Qs. Especially, it was mostly led up by that. Earnings, obviously, some big tech earnings in the end of last week, and we're still on tap for some earnings coming up. Consumer cyclical and healthcare are still surging. They're the only two sectors out there that I haven't even seen really slow up. Consumer staples has, but consumer cyclical looks like it's moving a little higher, and healthcare is just kind of on a tear. But hey, they could slow down. I imagine these markets do pause here for a little bit. How do we finish? Exactly like you'd think, with two inside days, Monday and Tuesday. Dow, the S&P, and the Qs, barely a little pulse there. Look at Qs barely came back to finish on the green side. Russell, shy of 1%. Oil's up 1%. Gold's up about 0.44%, about 0.5%. So inside, nothing really going on there. Advanced decline line, 69% advancing, 26% declining, and 5% really not gaining or losing. So it is a definite inside move there. Above below the 50-day moving average is almost down to 50-50. We've seen with consolidation, you can get some correction in a lot of stocks, but these can be also look like pullbacks, even though they are at that 50-day 50-day moving average. Doesn't mean it's a bad thing. It just means some of these are consolidating. So let's just jump straight into the charts to see if there's anything we can pull from them. And I'm not seeing too much, as we only have just these 2 days to go off. So we had a really nice little pop here up on the SPY. The Qs is a little bit further, and the Dow is kind of in between there somewhere. But I mean, this movement is still technically this movement. You could draw an ascending triangle breakout here, an ascending triangle breakout there. A little bit of hesitation to yesterday and today, but it is definitely not going to change my outlook. It can't. I mean, nothing really bad has happened. Here's the Qs, and this is just setting up for another ascending triangle breakout. The strongest, right, of the three. Well, the SPY is actually being stronger, but we've got opportunity here. I'd be looking at ascending triangle. Even the Qs themselves look like it could trade. Just trading the ETF on its own. So not much has changed. It's only 2 days after another breakout, but so what's going on? We'll take a look at it. What you'd expect happened. We got a little bit of an inside day. Got to pull back in some of the leaders here, semiconductors. Maybe some of the software stuff going on. Basic materials had a little bit of a bounce. Basic materials actually hasn't been too bad of a sector as of late. I think we have it as a +1 currently. Financials doing pretty good over here. We had some good earnings from a lot of them come out, and that's probably what we're seeing following through. But like I said, the leaders of today, one of the biggest sectors or for Monday and Tuesday has been healthcare. We'll see if that continues. And not too much. I don't really want to go too deep into it or make too big of a deal for it, because really we haven't moved. I haven't moved that +3 on the monthly or that +1 for a while. And our top-down approach, folks, and where I'm looking at it, I can't do it again. So it's going to sit right there, and I am going to jump and look for more opportunity in the markets with corrective action or consolidation for more bullish or +1 trades. They don't have to be super bullish, but just kind of bullish. I've got a couple for you. Capital One, Disney. Disney's a pretty good one. I'll show you that one. Capital One's in the midst of a pullback, so it looks like it's in a retracement, but it's pulling back right to a good support level, so check that out. ON is our neutral trade. I like Goldman Sachs. I showed you ON for a while now, and it's still looking good, but I'm going to show you Goldman. Coin, AMAA, look at that. We got More of the same here. LNG, it's just, its weakness is kind of where you find it. You just have to kind of look for it. All right, let's just jump into them real quick. This is Disney. Now, they do have earnings, I believe, tomorrow afternoon or tomorrow. I think it's tomorrow afternoon, but it looks like nobody cares, and it's moving. There's good volume on this move to the outside. This is kind of zoomed in, but you'll see this is a pretty significant breakout today. If you go further back, you'll see that it has really turned around. I do like that crossover right here when it broke, but it really wasn't a feasible trade until it got above at least this level. And boy, when it did, it consolidated at a previous level, and then it's off to the races. So you might feel like you're chasing it, but hey, this is approaching $100. It's got news coming. If you're worried about the buy on rumor, sell on news, that can happen. But if the volatility starts to drop off, this could be something that could go further. You can slow play it. I mean, play it for a little while, like a few weeks. Let's move over to Goldman Sachs. This is our consolidation play. I looked at it, and I do agree with anybody that wants to play it as maybe a consolidation high base breakout. But what I do like about Goldman is it's a pretty expensive stock. So let me get a better box drawn here. All right, I'm going to widen it out a little bit. So I'm trying to focus on about where that 50-day moving average is. But if I carry it all over, you can see 372 to up to what, 390? 392, somewhere around. I mean, that's $20. So it's got a pretty good range up there, and that 20-day moving average is pinned. However, if you guys are glass half full, this might be something you want to play right where it's at, right around the 385 mark, and see if it can't surge up, maybe through this 395 area. Play it as a breakout. I'm fine either way. It depends on how long you want to play it. Right? 2 weeks, 4 weeks, 1 week. That could change your outlook quite a bit. And then lastly, we'll bull to our bear here, and this is Coinbase. I liked it. The other ones down there are a lot more aggressive. This looks like, or I should say aggressive, a lot more downtrending. What I do like about these is when they first start, you got this really cool crossover going on. At the same time, you've got pivot high here, pivot high here, pivot high here, so decreasing pivots. And then once again, I could use this blue line that's already in the chart here, or I can draw it real quick here. Descending triangle pattern. It might play with this 120 level. I think it does for a little while, so don't be surprised to see a little shadow back up. But it looks like it's something to play to the bear side if you're looking for it. So not a lot, man. The markets are still sitting in a very bullish area. I don't want anybody to overthink it. It's bull, it's bull, it's bull. We can talk about bears. Focus moves to the Fed's next move. They're not doing enough. They're making a mistake. Oh, here's some good political stuff. Oh, geez. What's going on in politics? The world's going to heck in a handbasket. Whatever. Keep that for fun and leave it on the side. Let's see what the market prices and sentiment does, because whether the Fed got it right or wrong, the market sure as heck like it. Doesn't matter. It's going up. So don't let either of those things impact your trading. And it's going to get tough out here, because once we get out of earnings and there's really not much to go off of, then all of a sudden you start to get froggy, and we'll see. We don't want to be reactionary. Economic reports, stable and expanding in most areas. It's really right on. I mean, everything that you expect to be weak isn't quite weak enough, and everything you want to be strong is. And we got a very active consumer, an employed consumer, a confident consumer, and that's about it. Good earnings, growth, expansion. So very light this week. As far as the rest of it, we got consumer credit, jobless claims, lots of Fed speak, if you guys are really into that, or else if you're like me and you have a problem sleeping, just turn on one of those Fed chairs and just listen to them talk for a good 5-10 minutes, and you'll be out. So not a lot going on there. And then earnings reports, we got AMGN, Gilead, Chipotle, Ford, Prudential. That's what's on talk for the next day, today and tomorrow. But always check them as they go, because we're still in earnings season. That's what I got, guys. Short and sweet. Not much has changed. If your portfolio is comfortable, then don't change it. Stay with it. If you need to add a couple things here and there, go for it. But don't be too aggressive in direction or counter trade. Talk to you guys next time. Bye, everybody.